If you watch multiple market structure videos and still don't understand market structure, in this video I'm going to simplify market structure and liquidity sweeps to help you become a more profitable trader. In today's video, I'm going to try to simplify market structure in a way that you can understand to help you become a more precise trader, because what happens is in the beginning, you may enter a trade that looks like it has an A+ setup, but the trade goes in the opposite direction with a lot of momentum. The reason this is because you didn't understand market structure and you simply couldn't understand where to enter and where to exit based off of the higher time frames. So in this video, I'm going to simplify how to look at market structure to not get stopped out or be used as liquidity. So basic structure, I've talked about this before, but I'm going to do a quick little summary before we get into a little bit more of the advanced topics. For basic structure, we have an uptrend, downtrend, and sideways action. That's all that market structure, in the most basic terms, that's all market structure is. For an uptrend, we have this low here. We create a higher high, and then when we come back down, we create a higher low. Then we keep moving up. This is once again a higher high, a higher low, and higher high. And to continue within the uptrend, we want to see higher highs and higher lows being created. For a downtrend, it's the exact opposite. We have a high, we create a lower low, we create a lower high. So from the previous high, this is lower than the previous high. And this indicates that it's a downtrend, and we keep moving down, lower low, lower high. And then of course we get our low. Finally, we have the sideways action. Now for me, you guys know, I like to trade either upwards or downward trends. Other than that, I am not taking a trade. So if we're in a range or if we're in a sideways market, I'm going to usually wait until we break either side, either to the upside or to the downside. I don't like trading sideways action. And as we can see here, indicated by the chart, sideways action is simply the consolidation that occurs when we are in between trends. The reason I don't like to trade sideways action is because sideways action is usually when buyers and sellers think that the stock is at a fair price. Therefore, as a trader, we do not have an edge in the markets because both buyers and sellers have determined that this is a fair price for the stock. Therefore, they're not going to either push the stock to the upside or to the downside. Once we break that sideways action, that's where we get a trend, and that's where my edge comes in. Now, of course, the examples I'm showing you right here are very, very simple to understand. You're probably watching this video and you're like, okay, higher highs and higher lows. But when we actually go into real charts, these are really good A+ textbook examples. You won't get textbook examples in the real charts or when you're trading intraday. And that's why it's super important to watch this video, because I'm going to show you in the real charts how to look at structure and identify if you're in an uptrend, downtrend, or sideways action. Now, one thing that traders get confused on is they don't understand where does liquidity sit. Because they don't understand liquidity, even if you understand market structure, you will not understand the chart well enough to actually trade. The reason this is because you're going to get faked out more often than not. So the most liquidity on the chart is above previous high and low of day. This is followed by higher time frame levels and swing high and lows during the day. To identify trend, look for liquidity sweeps. So in this example we have here, we see a clear uptrend being made on the stock. We then see a range, this range period or sideways action right here. And as we can see, retail traders probably have their stop loss right below this range because they believe that if we do break this range to the downside, a downwards trend, because we're creating a lower low. However, you have to understand where liquidity is sitting. So we have buying liquidity right below that previous range low. The reason this is because we consolidated here and there is unfilled buying orders. If you guys haven't seen my fair value gap video that I created last week, make sure to go check that out and this will make more sense. Once we break down here, we see that there's a lot of buying liquidity. So buyers come in and buy the stock very heavily, and then we get a break of structure. A break of structure simply identifies that this trend is continuing in the direction it was before. Once we see that break of structure, we can now understand that we do have a clear upside trend. We see once again that range again, and new rookie retail traders will have their stop below that range. But we understand the most profitable entry for this specific trade would be at the retest of that previous break of structure. So we would enter in on that previous break of structure as seen here, and we would go long on this position looking for new highs. Now, if this example did not make sense, you can always replay the video. However, within the real examples that I will show later on in the video, this will only make more sense to you. How how to trade market structure. Now there's 3 simple steps that I've identified and we're going to be looking at. Number 1, higher time frame levels. Looking at higher time frame levels helps you look at the bigger picture. Most traders enter in on the 1 minute, the 5 minute, or the 15-minute chart. What happens when we're entering in on those time frames is you don't see the bigger picture, and bigger buyers such as hedge funds or banks, they're only trading on the higher time frame levels. Therefore, for us as a retail trader, we need to understand there's more emphasis on higher time frame levels, and whichever way the stock breaks on the higher time frame is where the lower time frame will go as well, even if the lower time frame is telling you a different picture. Therefore, the number 1 thing to read market structure is looking at the higher time frames. Number 2, always mark out the previous day high and low. This is where the most liquidity is sitting from previous days because that's where the most unfilled buy and sell orders are. And step number 3, wait for break of structure or liquidity sweep and then enter using your own strategy. This is very, very key. I don't know what your specific strategy is. So when you do wait for break of structure or liquidity sweep and you want to enter, make sure you're still looking to enter based off your strategy to have the same risk to reward, profit targets, and stop loss you usually would have. However, when combining that with market structure, you will only increase your win rate. But this is once again with your own strategies. So make sure to understand what your strategy is. I have a lot of strategy videos on my YouTube that you can go check out if you don't have a specific strategy yet. So with that being said, I explained market structure, but now it's time to go into a real chart and understand how to trade market structure with real examples. So here on the first example, we're on SPY. Now on SPY, what do we see? The first thing we want to do is go to the higher time frame. On this time frame here, we're on the 1 hour. On the 1 hour time frame, we want to mark out pivot levels that we see on the chart. So the first pivot level that I see here is this high that we made. This is the high on the chart so far. And then the second level that I see is this previous high and then consolidation that we see. We can mark this out as red because we're currently above this and we can use this as support. As you guys can see here, this was an impulsive move to the upside. We rejected, showing that sellers were strong here, and then we broke out and consolidated to make an impulsive move to the upside. So this is a level that the stock has respected multiple times. Therefore, we want to stay above 457.39s. Now, on the 1 hour time frame, we also want to mark out the swing low, which is going to be down here as well. The swing high, the swing low, and then the pivot level that we see from a couple days ago. Now, we also want to mark out the previous day high and low. We can do this here as well. We can mark out the high and we can mark out the low right there. So these are all the levels that I would be looking at on the 1 hour chart. Now let's go over to a smaller time frame. Now, what do we want to see? On this time frame, on the 1 minute chart, we're going to open up here. We want to stay above 457.39s. This will show that we have enough strength to take a move to the upside. And for me, I need a break of structure or any sort of liquidity sweep, plus my strategy, which is, once again, if you guys know, the break and retest. So here we can see we're opening up on the stock. We're trying to hold this 457.39 level, which we're holding pretty well right here. And we also see this high of day. This high of day is currently being used as resistance. Therefore, we want to break above this 457.99 or 458 psychological level. And this would indicate a break of structure to, once again, the upside. Here we see that break. And notice how once we did get that break, that was a very, very strong break to the upside with an impulsive move. Now we see that we created a new high here as well, and we created this higher low. Now, for most traders, they're going to put their stop loss at this previous higher low. However, we understand the break of structure occurred at that 458 level. Therefore, for us, this would not be a stop loss because this is just a higher low so far or a potential higher low. The real break of structure to the downside would occur if we come back below 458s. Therefore, so far, we're still on an uptrend. Now, I want you guys to notice one thing. What do we see here? Well, we see that we did make this potential higher low. We came back down. We came back into, once again, that liquidity sweep. We had that liquidity sweep because retail traders think that this is the higher low to put their stop loss on. Therefore, they got stopped out. Then we came back into that previous break of structure at 458. We held that very well. And then we made an impulsive move to the upside. After this impulsive move to the upside, what do we see? Well, we did break structure. And right here at 458 again, this was another break of structure showing another move to the upside. And now we're retesting this higher time frame level, right? We're retesting this 458.93. This is previous day high, and on the hourly time frame, this is also swing high, and we're currently retesting it. When we're retesting this level, what does this show? This shows that there's a lot of strength, and sellers did try to bring the stock down, but buyers brought it right back up with that strong wick. Therefore, we can enter into the trade here because we understand that the trend has been developed to the upside. Our stop loss here would simply be the previous break of structure that just occurred right here. So we have a very tight stop loss. And our profit target here can simply be at 460. The reason it's at 460 is because this is the whole psychological level, and this is what stocks tend to respect. So if we were to go long on this position right here, we would be looking for 460 with our stop loss right below that previous break of structure. Now this would give us a 4.46 risk to reward trade. This means to make $1,000 on this trade, we would have to risk $224. And we know this is a good trade because of that market structure plus combining our break and retest strategy. So let's enter into the trade here and see exactly what happens. And just like so, we got to our profit target and made $1,390 by simply understanding market structure, where to put our key levels, where to put our stop loss, and overall identifying where the liquidity on the chart sits. Now, let's go look at one more example to really solidify this concept. Here we are on another example. In this example, we're on Apple. And the first thing that I notice on Apple is we see a break of structure occurring right here. 191.93 level. This is because we see that we hit this level once, twice, and 3 times as resistance, and we could not break above. But when we did, we got a very strong break of structure. And therefore, this is going to be a level that we need to respect. As we can see on Apple here, pre-market, we did come back and respect this level. Another thing that I noticed on Apple is that if we look at the previous day's data here, we see that we actually created this potential higher low. Now, this is where most people would put their stop loss and believe that if the stock breaks this, we would actually reverse on Apple. However, we understand our stop loss where the previous break of structure occurred, and this is at 191.93. And as we can see, pre-market, we held this very well and made another impulsive move to the upside. So on the higher time frame, that's what I would be looking at. Another level I would be looking at is right here. This was the previous swing high that we did reject and then break afterwards. So I would mark this level as well. And then of course I would mark out the previous day high, just like so. So those are all the levels on the higher time frame that I would be looking at. And now that we understand that the stock's trend is still to the upside, let's go to the lower time frames to see exactly how I would trade this. Here we are on the lower time frame. In this example here, we see we're holding below 194.25s. This is a level that we do need to break to continue that move to the upside. And just like so, we do break that level to the upside. Now we're coming back up to 194.99s. And as we can see here, what happened? Well, we needed to break the structure to the upside. We do break to the upside. We touch our previous 194.99 level or 195 psych level really, really well. And we come back to retest 194.25s. So in this example here, we see the clear break of structure. We see the previous resistance. We see we come back. Buyers are holding the stock because they understand if we break below the structure, we do reverse on the trade. So how would I enter this trade here? Well, I would look to long this position here with my stop loss below this previous pivot low. And my profit target here would simply be at 196. The reason it's at 196 is, as we can see, the 195 psych level respected very, very well. And therefore, we understand that the stock does respect its whole numbers. And therefore, I can use that 196 level. So we would enter into the trade here and let's see exactly what happens. Notice how we're still holding underneath that 195. This is because both buyers and sellers know it. That is the break of structure. If we break above it, we will see a continuation to the upside. Here we are breaking above that. And as we can see, we also held and retested that level. This shows once again the break and retest strategy working with the break of structure as well. Just like that, we hit our profit target for the 196 psychological number, and this gave us a $1,393 trade. I hope you guys are able to understand market structure and liquidity in a much more simple way. If you do want to learn more from me and exactly how I trade my strategies, make sure to click the link in the description to join the waitlist for Mastermind 3.0. The previous 2 masterminds have sold out within less than 10 minutes. If this video did help you, make sure to leave a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter, and I'll see you guys next week with a brand new video.